Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table. Welcome. You are listening to Money on Tap. My name is Seth Krusman.
And I'm Ben Brayshaw.
And I'm Erik Morton.
Yes, that's correct. You are Erik Morton. Welcome back, Erik. How are you?
Doing well. Thanks for having me and not kicking me to the curb with being gone so long.
Well, you know, we're all about accepting you for who you are, Ben. That's what Ben says every day.
Did you have COVID? Where were you?
I didn't. I did have COVID activity in the office, being so busy with helping some business owners and answering questions, and so it's a good reason. But I missed you guys, and I'm glad I'm back.
Those of you that don't know Erik, it's wonderful to have an opportunity to introduce you to him. He is the principal of our property and casualty division here at Brayshaw Financial Group, making sure that you are covered when it comes to your property and casualty insurance needs. And so with that, I think it's a great time to tell people what we're going to be talking about, how they can get a hold of us, especially if they need to get a hold of you and Sarah, Erik.
Yep.
And so we are going to be covering today and talking about some extraordinary events here in the Northwest, which has been the latest fires. And if you're in Portland, Oregon, you're very familiar with this topic. It's nothing new to you. Those of you in New England, it might be a little bit, it doesn't happen nearly as often, I think, out there, but it's still really, really critical information for you to make sure you understand how to be covered properly.
Is it too political to say that you'd be familiar with it if you're part of Antifa too, or is that, I don't know if we should go there.
What is Antifa? Is this an idea?
That might be slightly politically.
I'm just kidding.
Might be.
You probably all think we're just all Antifa out here, don't you? You're like, yeah, those Portlanders, they're all Antifa.
I think you probably the only two I think that aren't.
Oh my gosh. Way off track, folks. We're you can reach us at 855-226-8551 or info@yourmoneyontap.com. Ben personally is going to be fielding all of those calls pouring in right now about whether or not we are Antifa or not. But I cannot wait to get into the meat of this show. Before we do, it is time for Money in the News.
Well, our first article, Seth, is an interesting one. Value stocks are outperforming growth, at least for now. It's a Wall Street Journal article that was shared a few days ago by Caitlin McCabe. You know, there's been a lot of conversation about the value space and a lot of information about whether or not value and growth and what that means and so forth. And for our average listener, when people speak generically about value stocks or growth stocks, they're talking about stocks that are primarily focused on either, in a growth scenario, a growth stock, and a value stock is something that has some sort of income or dividend kind of positioning. Now, not all, I mean, something like Apple would be considered more of a growth stock, even though they have a dividend, because their dividend is so low. But it is technically a growth stock. And, you know, value stocks would be things like, Dow Chemical or Exxon or, Chevron or any of the big companies. They have large dividend yields and so forth comparatively to the growth space. Now, there's been a lot of conversation in that, and the reason that people talk about value versus growth is that when they get more concerned about the different investment places, they tend to think that if I own a value stock, at least I'm collecting some potential yield, though it's not guaranteed, and I can hold on to it. And it's been a big conversation inside the investment world. Now, the one thing that's really going on here is that a lot of people are talking about, obviously, the election and what that looks like. And people tend to flock towards value stocks when they have a little more concern and they want to have exposure to the equity market. And in the article specifically, they talk about, it's, to quote, it says the S&P fell 3.9% for the month in its steepest September loss since 2011. The index was dragged down by recent pullbacks in mega-cap technology companies such as Amazon. High-flying momentum stocks like Tesla also pulled back. Shares of those companies lost 8.8% and 14% respectively. And they're just talking about this fear of the market going down and how that potentially is pushing interest into the value space.
It's interesting to talk about value versus growth in terms of 10 years even, because it is a space that has not performed historically in the most recent historical segment of our economy and our market, which is out of turn for the value space. Now, value has been one of those places where, when the economy takes a turn, that's where money starts to go, because it starts to seek things that are at a discount or at a better price and will ultimately kind of be markers that pull us through economic downturns. So with the most recent pullback that we've seen for value to have underperformed as much as it has not been typical. Right, it's a very, very much when we see a pullback like we saw with COVID come through, you would most likely see that turn to value, and that would just be one of the expressions of the market that we normally see. But that's not the case. We have seen Amazon and Tesla and some of these other names out there really pushing the market so much higher than previously. So right now, what a lot of the fund managers out there are pulled by Bank of America are saying is in the next 12 months, they really do expect to see value kind of take its turn in our market.
Yeah, and I think, Seth, to add to that too, I mean, a lot of people look to the growth stocks for, real opportunity to kind of rise and continue with the market. The problem is that we've already seen that. The value index for the Russell was, is still down 13% in 2020. So, I mean, there's the belief that the value is still, underweighted. It's been oversold. There's opportunity there is the thinking. Yet we've watched and kind of climbed out of this pullback in the market based on the growth stocks. And when you look at the S&P 500, most of the S&P is still struggling. But there's a few of the big companies, the Apple, the Amazon, the big S&P players are the ones that have carried the S&P 500 out of that, which is interesting.
You guys mind if I ask you a question from outside the industry?
Go for it.
So value stocks, if I were to just think of it as in real estate terms, would be a fixer-upper or a used vehicle. How would you explain that to folks that are trying to get a real handle on that term in the investment world, using that type of comparison?
That's a good idea. So I mean, I would use it this way. I would say that a value stock would be like I was thinking of the some major building in New York City that's beautiful and been built. It's 15, 20 years old. It's got rental, it's creating current income and so forth. And that's, it's kind of like that big mega building. It's going to rent, it's going to provide that income. That's your value asset.
Consistent, established.
Yeah.
Not going anywhere.
That's your large cap value. I would say something like if you were looking at an office development, where it says, hey, listen, we're building this office development outside the city. It's a nice area. Nothing's rented yet. We're going to build. We've got maybe one building's built. It's rented. See what we can do. We're going to continue this process and go forward. and we're going to get there, and we're going to produce this super valuable asset. That's the growth concept. That's how you're growing into it, and the value is going to be, and the growth asset could be something like a massive corporation who's building another development that they have a proven track record, and this is what they do.
Rolling the dice a little more on the growth, it sounds like.
Exactly.
Yeah, growth's kind of like
Very
your
good.
Convertible during the summertime. Everybody's in, Let's jump on that, and value is going to be your tractor trailer that's making sure that your goods and services are getting from point A to point Z, right? And not everybody's looking at that as as what they want to purchase or to buy or they're interested in. It's not really capturing their attention so much, but it is really what's allowing the rest of the economy to transact. So, and really the price to book there is one of the things that we talk about or we look at, and because value is ultimately like it's like you were talking about real estate and like kind of picking the fixer uppers. It's not bright and shiny, but comparatively speaking, it's at a discount to what the rest of the market might be at right now.
Well, if you were to use the real estate comparison, right, and you said, well, okay, there's growth and there's value, and then there's large, mid, and small cap assets. Okay, size wise, the large cap asset's going to be a massive, office building in Manhattan, and a mid cap asset's going to be something, in maybe Boston or something, something a smaller city, and then the that could be large cap value or growth depending on the type of asset it is. And then when you get into like a duplex, right, like a 2-family house or something like that, if it's a fixer upper and it doesn't have a tenant, now you're talking growth. If it has a tenant and it's a really nice old duplex and it's in good shape and it's been rented for years, well then and it's got a recurring revenue, well that's going to be more of a value asset.
Nice. I appreciate that, guys. I think that helps connect some dots for some folks.
Great. Well, you're going to connect a few more here in just a second because we're talking about renewable energy can live with Trump or with Biden. All right. So the last 4 years have proven that the industry is past its formative years. And this article is brought to us by Jinju Lee. And
you always get the crazy names. I get the easy one, the McCabe. You get the Jinjubilee.
It's because I don't I give you the layups, Ben.
Seriously.
I'm bringing the real news to the market today.
Thank you.
Articulation is his game.
Yeah. So the renewable energy stocks right now have been flying high. Okay, so and this is a run up even into Election Day. That isn't necessarily a reflection of Joe Biden's perceived edge here. Okay, so the last 4 years have shown that the renewable energy industry, A, is resilient, has tailwinds from declining technology costs, and from years of federal tax credits as well, which have received bipartisan support, have simply been too strong. So there is just a lot that has gone into this area of energy that has allowed the alternative energies to get a foothold, get a real consolidated foothold here.
Yeah, there's definitely some interesting stuff. We were talking about this article offline earlier, specifically about the unsubsidized comparison of coal, wind, natural gas, and solar, and it was really an interesting thing about how the cost of coal has to produce coal energy has continued to increase over time, and that probably has to do with the cost of general labor and so forth. I mean, there's so many things that are automated once you get wind up and going. But wind originally is more expensive, but then declines over time. And then solar has declined significantly, becoming the cheapest energy. But I thought, Seth, when we were talking, just looking at the numbers and stuff, natural gas is just a little bit more expensive than solar. And we have an astronomical amount of natural gas in this country.
It has also been declining as far as the cost.
Oh, yeah. It's tremendously inexpensive. And that's crazy. I mean, that's why they even talk about, creating cars that run off of that and all the different pieces of that, which is just an amazing scenario. Now, I think one of the things about this renewable energy piece, and it's attracted a lot of interest, basically and significantly due to the green energy plan that Kamala Harris has co-sponsored, and that I understand it to be that Biden is also in favor of it. Though the debate a little while ago, he claims differently, but the article also says from the Wall Street Journal here, of course, Biden could usher even better times for clean energy, quoting, though he would need a Democratic majority in the Senate to push through his most ambitious goals. He has proposed a $2 trillion plan amid achieving zero carbon emissions from the grid in 2035. So irrelevant of the political standpoint, the Wall Street Journal is also claiming that this is a Biden stand, and honestly, there's a lot of questions around the economic validity that would drive whether or not this type of initiative would hurt our economy or help our economy, and the amount of stimulus that potentially might be needed to get there. The tax incentives and so forth. I mean, those tax incentives directly come from our pocket. I mean, anytime there's a tax incentive, the government's paying for it from the income they get, and that's from taxes that they tax us from. So there's an interesting, some people are going to benefit from this and some people are going to struggle. But I think ultimately, I'm generically very pro renewable energy, but I also think we need to figure out how it makes itself become a competitive advantage without, and it is clearly doing that looking at some of these charts.
Headwinds, I would say here, or some of the speed bumps, it's really difficult to evade the action solely through the federal level, is what it talks about here. Replacing the bulk of baseload generation, sources of electricity that can run on command, with a high share of the solar and wind that kind of threaten that grid reliability. It's important to note that it's not all, blue skies and everything here for renewable energy. The bright spot here that I take away is that there's been time for these technologies to come to the market, to get the sponsorship that they need, to work out a lot of the kinks that have made them cost prohibitive in the process, and to get a foothold in here. And it sounds to me, if I take a look at that, what it sounds to me like it's really trying to say is that the reliability of it and the grid has to be somehow accommodating for these new technologies to come to the market or to come to consumers on a consistent level.
Well, I think also the green energy initiatives and stuff, and I mean, some of the other articles we actually looked at was, California's initiative to roll out cars, all electric cars, basically from 2035, I think it was. I mean, that's just the way they're going to go. And I think honestly, the demand on that, those cars have to be powered by some electricity. That's really a problem. We can't just have, hey, green energy everything right now. It's just too much of a demand on our society. And I've read articles opposing that, which it says we can do more by, basically forcing China and India to clean up, just 10% of their pollution versus the micro specs that kind of pressure on our economy would actually improve the global.
Overall.
Yeah, exactly. And it's just, so, we need to do more work globally than we need to do focus on our home right now. We've done most of the work, is really what I'm trying to say.
Well, that's a different take than what you said earlier about just pushing California off into the ocean. That was a problem solved originally, right?
That was, but I'm rethinking that. I'm rethinking
Bad idea.
All right, that's going to do it for us with Money in the News. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. When we come back, we're going to be talking more specifically to Erik Morton, who is our head of the PNC division here at Brayshaw Financial Group, and that stands for Property and Casualty Insurance. And we're going to be specifically talking about what's happened here in Portland with fires and how property and casualty has been a huge part of the story around people's lives and protecting them. And we want to know more. We want to understand how to protect you, how to protect ourselves. And what are some of the intricacies here that we probably haven't even considered when taking a look at property and casualty insurance? And so Erik's going to walk us through some of that. We can't wait to get into that with him. But before we get there, we're going to take a quick break, and we'll be right back. You're listening to Money on Tap. Don't go anywhere.
Hi, my name is Ben Brayshaw, one of the co-hosts of Money on Tap. If you have questions when it comes to your retirement and are looking for a personalized solution, contact us at Brayshaw Financial Group. In today's volatile stock market, we can help you plan to find your successful retirement solution. Am I saving enough? Am I saving into the right places? Do my investments match my appetite for risk? Do I have a tax strategy that is going to help me keep more of what I earn? How can I maximize my Social Security income? If you are like most people, you are getting closer and closer to your retirement and may be wondering if you're taking the right steps. If you're in retirement, you may be wondering, am I maximizing my income while preserving my estate and caring for my family? We talk about all things financial in what we call three-dimensional investing, putting a plan around your financial future. If you feel that now is the time to start getting the answers to some of these questions for your own situation, give us a call at Brayshaw Financial Group at 855-226-8551. Headquartered in Bedford, New Hampshire, we have offices throughout New England and across the country. We would love the opportunity to show you how we can help. There's absolutely no cost or obligation just to meet with us, and we welcome you to our office. Call us at 855-226-8551.
Now back to Money on Tap with Ben and Seth.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. With us today, Erik Morton, head of our property and casualty division at Brayshaw Financial Group. And also, we've got some great people in place to help support your business, to help support you personally, to protect you and to protect your business. And that's Erik. And Erik's going to talk to us a little bit today about property and casualty insurance, and specifically what has gone on in Portland, Oregon here, and Vancouver, Washington, where Erik's at, and the fires that have taken place recently, and how people's lives have been radically changed by those events, and how you can be protected. Erik, welcome.
Thanks, guys. Appreciate you having me back. Hopefully we'll get this a little more regular again. But I will say that part of the reason why I've been gone is because of how busy we've been, which has been great, to help people in a time of need. Of course, starting with COVID months ago, but most recently with the fires in the area, our phones have been blowing up, and the phones have been blowing up for multiple reasons. One, kind of not humorously at the same time, was some folks that had forgotten to start their policies, and they were now in a level 1 evacuation. So these terms are new for a lot of folks, and they start getting messages and alerts that tell them that they're at a level 1. Well, what does that mean? Well, what's a level 2 mean? What's a level 3 mean? In the insurance world, those are pretty important to know, because when you get to a level 3 mandatory evacuation zone, when that's creeping up near your home and within a mile, that's when your insurance policy could or could not trigger some coverage for you to get out of town and live for a little while. So this is the number one and the biggest thing that I ask people to take a look at their policies, talk to their agents, find out what is in the specific details of their policy under a coverage called loss of use. You may see it on your deck page, and sometimes it's deck page meaning declarations page. You see that term loss of use, and you'll see it sometimes as a 12-month or 24-month limit, sometimes a dollar amount limit. But what that does in the need of a forced evacuation, level 3 is how we classify it out here. You get to live for up to 2 weeks on the insurance company, and that is something that you can either make sure you have on your policy, number one, and then take your receipts, keep them handy, turn them into your agent for reimbursement. A lot of folks were wanting to stay. You're torn between you're wanting to stay and protect your property. Then you've got people that potentially might be coming in to take things from you. So there's a lot going on, a lot of stressful situation. So take that stress out of your mind and take a look at your policies. Make sure what you have there is adequate. Have you guys looked at your policies recently?
Wow, that's a tough question. Seth, I'm going to let you take that one.
Yeah, we did. We took a real good look at our policies, and specifically up in Washington, where the fires got about 6 miles away as the crow flies, which is closer than you certainly would like to be. Level 1 was where we were at, and right down the road it was a level 2, and took a look at those, and guess what? We upped the coverage on a few things because, it wasn't front of mind. It was in place when we needed it, and we thought that was adequate enough. But a few years goes by, and things change. The values of those properties change. You need different coverage or better coverage at times, and the cost in that is so nominal. It was one of the beautiful things. Yeah,
it really is.
Yeah. So yes, definitely, it forced our hand. And
yeah, it's a good. You mentioned that you were able to make the changes. That kind of rolls into my next point, which is a lot of folks did call when it was already past time. And what that means is when an insurance company has binding restrictions or changes that they can't, they're not allowing people to make in certain zip codes because the threat is imminent. I used to live in Florida for many years, and when a hurricane was in the Gulf a certain amount of days away and the path was trajectory, through Central Florida, Lakeland, Florida, you'd see all the zip codes go down in lockdown, where you can't purchase a new policy. You can't make a change to a policy to add coverage at that time. So it was interesting to see a similar situation out here play out for fires. And they were actually, in some cases, even with a level 1, only a mile away, they somehow were able to determine that the trajectory of that fire was going away from some of these zip codes. So you were still able to make changes. You're still able to bind some policies, but there were some folks calling frantic to try to get something done ahead of time that they'd forgotten to do a couple weeks earlier. And it's a good reminder to make sure you're looking at that and planning ahead to get something done. So that's always good advice.
What do you do, Eric, if I'm just thinking about real estate transactions and the buys and sells of property and stuff like that and binding coverage? Can you elaborate on that for people? Because, there's people out here that are probably saying, well, we don't have fires on the East Coast, but I do remember years ago when Keene got hammered with floods about a decade ago, and it was wiping out homes that had never been flooded before, and people didn't have flood insurance,
Yeah,
and,
that's great point. And actually flood insurance and each policy has there's different criteria. So for flood, you actually have a 30-day waiting period if you have a policy in place if you own a home currently, and you're not buying a new home, you can actually bind coverage for flood, but you have to wait 30 days before it's active. So if you hear the forecast a week out, we're going to have, there's flood warnings. You can't actually buy that coverage at that time. You've got to do it ahead of time, but there's some caveats. There's some ways to make sure you get it immediately. And that, of course, is a new home purchase. They allow you to do that. And then there's also some zones, flood zones, that it's required to carry. So when you take that mortgage out, you're forced into having a flood policy.
So right now we're heading into our rainy season. You guys are, season's changing. Is that something that you would put on the horizon for people? I guess, what do they need to be paying attention to? What could they be looking at right now in terms of protecting themselves from, earthquake could strike anytime, right? That's something we live with here.
Yeah.
But seasonally there could be some things to try to put in place too, right?
Oh, absolutely. And there's actually there's a combo, because when you have these massive fires, it really does a number on the land and everything surrounding your home. So if you're up on a slope, now that the heavy rains come after fires and the trees aren't there to kind of keep that in place, now you're starting to talk about earth movement. Earth movement's covered under an earthquake policy. Earthquake and flood are not standard on a home policy. If you have a home policy, unless you've specifically talked about earthquake, it's most likely not on there. Flood policy, definitely not on there. You have to get that either through the National Flood Insurance Program or a private flood insurance company. So both of those things, you're thinking earthquake, okay, how likely is that? Well, out here it is, like you mentioned, Seth, and we even had a couple recently up near Olympia in the middle of all the fires. Is like, what else can happen? Think about that earth movement and landslides and things of that nature. A good friend of mine had one happen last year, and just a terrifying experience for him and his family. The whole side of the mountain just crashed down, and luckily they were fine, but it just is something you would never even think about for the most part. So definitely sit down with your agent, review it by phone, do a Zoom call as we're all doing now, and Skype or whatever it is, and just take the time to set it up early so that you're not hoping you have it.
Folks, we're talking with Erik Morton, head of our property and casualty division here at Brayshaw Financial Group. And we've had the recent fires here in Oregon, which has really brought to bear a lot of the questions that we're covering today. And so if you're just jumping in with us, we're going to take a quick break, and we're going to come back and talk more about what is the process in walking people through. Just, Erik, I'll cue you up here. We're going to ask you, what's it like for somebody that has come into this situation where they're in the path of a fire? They go through these 1 through 3, and then maybe the loss of a home, and or any of their property for that matter. And what does the rest of the process look like for them? And I mean, we understand putting coverage in place prior to this happening is ideal, but even if they have now had that coverage or versus not had that coverage, if you could give us a little bit of an idea of what those two different scenarios play out like, that's what we're going to talk about next. And also want to introduce Sarah Vazani, who, if you are in the New England area, is who you'll want to be talking to with us at Brayshaw Financial Group about your property and casualty insurance, and how you can get in touch with her and get your questions answered and make sure that you have proper coverage in place, protecting you and your family from, things that are going on in New England. It's different there from us over here on the West Coast, and we understand that. We're going to take a quick break, and we'll be right back. You're listening to Money on Tap, and you can reach us at 855-226-8551 or info@yourmoneyontap.com. Hi, my name is Seth Crustman, partner with Brayshaw Financial Group and one of the co-hosts of Money on Tap. One of the biggest concerns and largest expenses people face today is taxes. Without thoughtful planning, taxes can destroy future retirement dollars, eliminating the possibility of a timely retirement or dreams of what you want retirement to look like. If you're like most people, you're getting closer and closer to retirement, and you may be wondering if you're taking the right steps. Will my income be enough? Will rising taxes force me to give up my dreams? How does inflation factor into all of this? These are real concerns, and you're not alone. Putting a plan around your financial future is what we do. If you have questions when it comes to your financial security, and if you're looking for a personalized solution, contact us at Brayshaw Financial Group, 855-226-8551. It's time for you to start getting answers to your questions. Headquartered in Bedford, New Hampshire, Brayshaw Financial has offices across the country. We'd love the opportunity to show you how we can help. There's absolutely no cost or obligation to meet with us. Call us at 855-226-8551. 855-226-8551.
Now back to Money on Tap with Ben and Seth.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Right now, we're talking with Erik Morton, who is the head of Brayshaw Financial Group's Property and Casualty Division. And we've been talking about fires in the West Coast. How has that changed, really, the conversation around property and casualty insurance for our clients? And before we start going down this road of really the experience that our clients are going through, working these scenarios out, Erik, I want to ask you to tell us a little bit more about you and about property and casualty insurance and what that looks like under the hood.
Yeah, no problem. I appreciate that. And this really goes in line with everything that you guys are talking about. And we're independent agents. We're an independent agency. Some would say brokers. We're finding the best coverage for you with multiple companies. Some folks get confused by that. They think we're not actually agents. We're licensed agents. We're appointed with companies to write business through them, but we're not beholden to just one. And the advantage of that is, of course, when you see those increases or you experience a claim situation that you weren't happy with, we're advocates for you. We're advisors. We're agents. We're all of those things. And when I say we, it's myself and a team of 6, and we are scattered across the country. We've got representation in New England with Sarah, in Keene and Bedford. We've got representation in Arizona, of course, out here on the West Coast, Portland, Vancouver area, and even in Alaska. So, I jokingly say to folks on the East Coast, is like, when you're up at night and you're worried and you're stressed, we're still in the office over here, and we've got some help in Alaska, and where during the summer at least they don't go to sleep, so because of that 24-hour sun situation. So that's a little rundown of who we are and the team that you have backing you up when you do talk to us. I wanted to make mention before we go into how the claim is handled and how the process of what would happen if you don't have the right coverage and you need to move forward with some things. Even if you're with a different company, I always mention this when I'm speaking in groups locally. I absolutely will take the same amount of time I would take if you were with us to talk about a claim situation, something that doesn't sound right. Absolutely would love to walk through what's going on, give some advice. Obviously, I can't represent different companies, to help you with that, but it's just an advice type of situation if you're running into a roadblock or something that just doesn't sit well. So offer that out.
Yeah, and I think that's really good for everyone to hear too, because I mean, ultimately, when it comes to handling your home and your auto and your business insurance and stuff like that, you need to have people available to take care of you. And I think, you don't want to just worry about 9 to 5. That's the only time I can get a hold of people. The exposure we have coast to coast here, and Erik, the team he's built and what he's done is fantastic. Super happy to have him as a partner of ours, and he has an extreme wealth of knowledge. And Erik, thank you for that, and thanks for all the hard work you've done. And I got a couple questions about the fires, and these are just kind of oddball questions. And I was joking around earlier about kind of the Antifa thing, but I really do have a question around that. And one of the questions is, how and when does it, and arson and all of those different issues play into insurance and stuff? Is it just self-arson that isn't covered, or how does that all happen? I mean, what's going on with those claims?
Yeah, that's a good question, and I'll actually back up a little bit too, because I actually got a large amount of calls the week that the fires were impending. We're moving here on us, and people didn't know that they even had coverage for fire, which to me is, as an insurance agent, been in the industry over 20 years, is pretty surprising, just because I know that insurance originally began as fire insurance. That's why they actually started the whole thing many years ago. And so, and there's even some companies that currently talk about the insurance. Home policy is not even home insurance, it's fire insurance. Like they call it that. So any type of fire that is not self-made by the owner of the home is covered on the policy. So arson, if it's because of the utilities, something happening there with the city or government or something, any of those things that happen that you're not at fault for is covered. And there are some other pieces, even if you were at fault, but it was a mistake or an accident, those types of things would still be covered as well. Like you remember folks that used to smoke in their homes and things like that, that would still be covered as well. But doing it on purpose, yeah, that's frowned upon.
So walk us through what the process has been for people that have either been in the path of the fires here or experienced a loss, like that kind of A to Z. What does this work out like for somebody that has or has had coverage or did not?
Yeah. Yep. Good question. One of the first steps, of course, is when you're in that zone 1 or that level 1, having to evacuate from your home, you're starting to think about, well, where would I go if I was forced out? Some people would stay, and some people unfortunately lost their lives because of it. Luckily, we did not have any clients lose their homes on this round of fires. But that first step is, where would you go? If everybody's looking to stay at a hotel in a safe place, those hotels are going to be booked up pretty quick. So you've got to have a plan to make that happen. You've got to have that emergency fund that you talk about all the time to take care of some of those expenses up front, because the coverage that may trigger from your policy is not going to be something that's covered as you're staying there. It's going to be more reimbursement. So you got to have the cash on hand in your savings, in your emergency fund, to take care of those expenses. And then if in the event that something does happen, you can't get back into your home, you've had a loss occur, like tragically mainly the whole city of Detroit, Oregon. My heart goes out to those folks. The city was basically wiped out. Now you're triggering that loss of use that was going to cover you for 2 weeks for a temporary evacuation. Now that triggers into the complete amount of coverage that you have to rebuild the home. So now you're going to be having your living expenses taken care of until that home is rebuilt in a similar fashion. And that can take 12 months, that can take 2 years, depending on what the availability is for contractors. So it's important to look at that clause, because there's some companies that only give you about $15,000 on that.
So Eric, so like you get $15,000 and that's all you got to live off of for the next, whatever, 1-2 years. What if you just say the town, like, it's horrible to hear about that town of Detroit. I mean, that's incredible. What do you do if you say, I got to get another job, the company I worked for there is burnt down, I have to move to Colorado or Utah or wherever, and that's where the world's taking me? What do you do then?
That's a good question. I actually have not come across that scenario myself, but there's going to be some coverage still in place. I mean, the best companies are the ones that are looking for ways to cover you in your time of need. The worst that you hear about are those that are looking for ways to not give you coverage. And so that's why it's tough, because folks who haven't been through a claim, they don't know how their company's going to handle that. So you got to go by word of mouth. You got to go by, okay, well, if this company's pretty large, that doesn't necessarily mean they're not taking care of their customers. That might mean that maybe they are in their time of need, and people refer those companies out. So I would say the specifics of moving to a different state or city, I don't know the details of how that claim would be handled, but I do know that there's going to be coverage. There's going to be ways that company's going to step up if you've got the right coverage in place. So it's important to not try to piece these policies together online only, especially home policies. Those are much more important. That's what you've saved your whole life to get. And just relying on, that rate looks good, let me buy that, without any interaction from a professional to review that.
Well,
it's just not a good idea.
If that's not clear after the last few months over on the West Coast, I mean, I'm sure people are realizing big mistakes there. And I would encourage any of our listeners on the East Coast, we're not without danger and fear. I mean, I remember as a kid, some of the ice storms we used to have that would just, totally destroyed homes because power was lost and everything froze. I mean, whole houses just destroyed because of it.
Nor'easters, the hurricanes that don't come up as frequently, but when they do, it's terrifying. You haven't experienced that before. It's not like Florida where it happens every year and everybody kind of says, well, it is what it is. But any of those things that could happen, that happen infrequently, it's just a good idea to get ahead of those items.
Yeah, no, that's all really good. Now, Erik, what would be the number one encouragement for people to check on? Sarah's awesome. You're great. Can't ask for two better people to be working with us. And, but there's probably a lot of people out there listening saying, I have no idea where to start. I don't even know what I don't have. I'm probably one of the biggest, I don't know what my homeowner's insurance coverage is, so what are people what could they look for? When's the phone call going to come in separate from them just saying, hey, I want to do a review? What could they go and look at and look for that maybe would be overlooked?
Yeah, I'm going to keep saying it. It's the coverage called loss of use. It's a big one. But there's another one that some folks don't know they have or have as an option. And what that is called typically called extended replacement value. Extended replacement value is a bucket of money that is a percentage of that top number that you see on your insurance policy. That's always confusing because you look at your insurance policy and you say, my home's worth way more than this. And that number, that rebuild cost, that replacement cost number is just for the structure to be rebuilt. It has nothing to do with the land, has nothing to do with the market value. And so that number can be lower because it's based off of square footage and contractors' costs. But there's a little subset coverage that's called extended replacement cost. Typically 25% is standard. You can go up to 40, 50, 100, 150%. And what it does is it adds that percentage of that number, the top number, on top of it, just in case, as a buffer. If that's not enough to rebuild the home, we've got 25% of that number on top of it. There's policies, again, online that you buy that wouldn't even have that. And then there's different percentages that are standard. So you may buy from a major carrier that's number one in the country, for instance, and 25% comes standard. That's a good policy.
Yeah.
But you can bump it up. There's some companies that allow for 40, 50, 100%. So loss of use, number one, just based off our fire conversation, a wildfire conversation. But number two is that extended replacement cost. And then it's just a good idea to sit down. Sit down with your agent.
Yeah, that's and probably that the extended replacement cost is probably more relevant than ever because the cost of. I was just talking to somebody the other day, and the cost of materials to build a house are up more than 2 times the cost it was a year ago. Like a pressure treated board or some plywood is 3 times the price that it used to be, and so. If you had to replace your house, probably what it is insured for as of last year, which most people haven't touched, it would cost way more to build that same home.
Yep, and there's a couple. Good point. There's a couple coverages that would help you there. So extended replacement is a bucket of money. There's also building ordinance or law. There's a 10% for that. So if you're now rebuilding that home and there's different requirements than it was when it was built, it's extra cost. Now you've got another bucket of money for that. And then lastly, some people don't even know that they have an inflation guard on their policy that increases that replacement cost automatically every 2 years by 3%. Some people say, hey, you're raising my rates again. Why do you keep doing that? Well, it's actually inflation guard that you have on your policy, and here's why. We select that, or that's why we put that on your policy originally. So you've got some fail safes there. It's not as bad as most people might think. Is like, okay, well, I don't trust that this policy is going to work. They're gonna look for ways to not give me coverage. If you're with a reputable company that's been around a while, they want to find ways to cover you, and those different buckets exist. You may not even know it.
Wow, that's interesting.
I have a question on, some of the more intrinsic things inside of your home that maybe aren't, the structural pieces that you would be replacing. Maybe they're, I don't know, maybe some art, and I know you can insure those independently, right? But are there different kinds of coverages to make sure that those pieces are taken care of as well?
Yeah, absolutely. Rule of thumb for what I advise is if you have anything that is a single item or a collection that's over $5,000, have a conversation with your agent to see if the company you're with allows to have that unscheduled. We call it unscheduled. If you need to schedule something, if you need to make that stated value of that art collection, that's $150,000 that I'm sure you have, Seth, just in your garage sitting there. It's not going to be covered after that fire, and you just say, hey, remember that $150,000 art collection, and no one had any notes on it, or it's just not going to be covered. So you've got to do that ahead of time. You've got to schedule it. You've got to get appraisals. But that rule of thumb is, I usually say 5,000 or more. Start thinking about that. You've got some special limits on your policy as well for firearms. Most of the time will only cover up to 2,500. Back in the day, there was more of this goldware, silverware. There's special limits there. So these collections and items, you want to have, pick up the phone, give a call, say, hey, what's on my policy now? I forgot to tell you that I bought a bearskin rug for $80,000 last week.
I did. How did you know?
That was an unusual example.
I also turned a refrigerator. I also turned a refrigerator into a safe the other day. Apparently, that was something the state of Oregon thought was a wonderful idea.
You better bolt it down. Or it's not covered. But no, that I jokingly talk about the bearskin rug, but that literally was a conversation I had to say, well, would my $80,000 bearskin rug be covered? I was like, no. And tell me more about this. I'm interested. I'm intrigued on how this happened. Yeah, it's just a good idea to have. Open that conversation up. Make sure you're covered properly. And if you've got receipts, if you've got appraisals, and you didn't call, it doesn't mean it's not covered. If it's reasonable, if it's provable, again, those good companies are going to extend coverage. They're going to make the exception in the gray area rather than not make the exception.
Well, that's going to do it for us at Money on Tap. You can reach us at 855-226-8551. If you have questions for Eric or Sarah Vazani, who hopefully we have to get her on the show here, Eric.
Yeah.
Give us a call. I really specifically like these the extended replacement, the building ordinance, and the inflation stuff separate from the loss of use. Those are things that I probably need to look into myself here. So I'm learning with you.
Thanks for joining us today. You've been listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Also, we're in a podcast. You can find us at any of the podcast venues out there. We appreciate the likes and the listens. We're also at Facebook at /3D Investing and Twitter at BFG_LLC. We appreciate you joining us here today, and we hope you make it a great day and a great life. Thanks for joining us with Money on Tap.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.